Want to catch winning trades before they explode? In this video, I'll reveal the top 5 crypto chart patterns that always work, backed by real signal alerts that show you exactly when to enter and exit. These patterns are used by smart traders every day. Like, subscribe, and let's decode the charts. The content provided in this video is for informational and entertainment purposes only and should not be considered financial advice. Always conduct your own research and consult a financial advisor before making investment decisions. When it comes to successful crypto trading, one of the most important tools in a trader's arsenal is the ability to recognize chart patterns. These patterns offer valuable clues about the future direction of a cryptocurrency's price and can be supercharged when combined with reliable crypto signal alerts. For beginners and seasoned traders alike, understanding which patterns are most reliable and knowing when to act on them can be the difference between losses and substantial gains. Let's dive into the top 5 crypto chart patterns that consistently deliver results when paired with real-time trading signals. 5. The bull flag, a signal to ride the breakout. The bull flag is one of the most powerful continuation patterns in a bullish trend. It typically forms after a strong upward price movement, followed by a brief period of consolidation in a downward sloping channel. To the untrained eye, it may look like the rally has cooled off. However, signal alerts tied to this pattern often indicate the trend is far from over. When the price breaks above the resistance of the flag channel with volume confirmation, it often results in another explosive upward move. Signal providers often notify traders when the breakout point is imminent, allowing them to enter just before the market surges again. The bull flag works best on shorter time frames during active bull markets, and is especially powerful when aligned with signal derived from momentum oscillators, like the RSI or MACD. The key takeaway is that when you see this pattern and a signal confirms volume is building, you can confidently ride the next leg of the rally. 4. The double bottom, a reliable reversal. Another classic pattern that pairs exceptionally well with trading signals is the double bottom. This formation signals the end of a downtrend and the beginning of a new bullish phase. It occurs when the price hits a low point, bounces up, retraces again to the same low, and then rallies, forming a W shape on the chart. This pattern indicates that selling pressure is weakening, and buyers are stepping in to support the price. What makes this chart pattern so reliable is the clear line of support and resistance it defines. Once the price breaks above the neckline of the W formation, signal alerts can provide real-time entry confirmations. These signals may also be accompanied by bullish divergence from technical indicators, strengthening the case for a long trade. Traders who rely on alerts often use the double bottom as a clear reversal indicator, especially after sharp sell-offs where price exhaustion is obvious. When the second bottom is formed with higher relative volume, combined with a strong alert from a trusted signal provider, the chances of a sustained uptrend are significantly higher. 3. The head and shoulders. Warning of a bearish breakdown. The head and shoulders pattern is considered one of the most dependable patterns signaling a bearish reversal. It appears at the top of an uptrend and consists of 3 peaks. The middle one, the head, being the highest, and the 2 outside ones, the shoulders, being lower and roughly equal in height. Once the neckline is broken, it often signals a trend reversal. What makes this pattern so valuable with signal alerts is the precision it offers. Signal systems can alert traders as soon as the price approaches the neckline with weakening volume, indicating that bears are taking control. Alerts may also include sell recommendations or future short signals depending on the platform. The head and shoulders pattern can also appear in inverse form, signaling a bullish reversal when the pattern is flipped upside down. In both cases, signals based on volume spikes, moving average crossovers, or breakdown confirmations provide traders with the timing they need to capitalize. The importance of using alerts cannot be overstated here, as the pattern's reliability increases significantly when combined with real-time analytics. 2. The ascending triangle, breakout with bullish pressure. The ascending triangle is a bullish continuation pattern that often leads to explosive price action. It forms when the price creates a series of higher lows while facing consistent resistance at a particular horizontal level. As the pattern tightens, buying pressure builds. The ascending triangle is a trader's best friend when waiting for a confirmed breakout, especially with the help of signal alerts. Alerts based on volume surges or RSI entering overbought territory just before the breakout are extremely helpful. Once the resistance level is broken, many signals are triggered, indicating a potential long position or leverage entry in futures trading. What makes this pattern stand out is how easy it is to define risk and reward. Traders can place stop losses just below the last higher low and ride the breakout with a well-defined target based on the triangle's height. For those using automated bots or app-based alerts, ascending triangle signals can dramatically improve trade execution by identifying breakout momentum ahead of the crowd. 1. The cup and handle, the king of bullish patterns. At the top of our list is the iconic cup and handle pattern, often considered the most powerful and consistent chart formation in both crypto and stock markets. This pattern typically begins with a rounded bottom resembling a cup, followed by a smaller consolidation that forms the handle. It signals a continuation of an uptrend and is a favorite among professional traders and signal analysts alike. The strength of the cup and handle lies in its ability to fool traders during the handle phase, where weak hands often exit due to the temporary pullback. However, strong crypto signal systems recognize this moment as a prime breakout setup. Once the price breaks above the resistance formed by the rim of the cup, alerts are triggered that often coincide with increased volume and strong market momentum. Some platforms even calculate the target price projection based on the cup's depth, providing traders with an actionable profit strategy. Advanced signal systems also monitor whether the breakout is supported by a positive trend in key metrics, like Bitcoin dominance, ETH gas fees, or network transaction volumes. When everything aligns, this pattern can deliver massive gains, especially in trending markets. That's why seasoned traders always keep an eye out for the cup and handle, often waiting patiently for signal confirmations to jump in. Those were the 5 powerful chart patterns that consistently work, especially when paired with smart signal alerts. Master these, and your trading game will never be the same. Which pattern do you trust the most? Drop a comment. And don't forget to like, subscribe, and hit the bell icon for more winning strategies.